traders from across the globe, and welcome to the 1000, whoa, we're way past that, the 2004th edition of Short-Term Day Trading live with Oscar Carboni. How are you, traders? YouTube fans, thank you so much for tuning in. Please make sure that you subscribe to these videos. Click the little alert button so that you get alerted whenever we put out a new YouTube video. And please like and share these around the internet for me, kids, so we can get a bigger crowd. With that, remember that this is a very risky game. Trading futures, trading stocks, trading anything is very risky, but I don't want to spend much time on this. Never trade without stops. Never trade alone. LiveWithOscar.com. Hang out with me in my live trading room. These markets getting vicious. I'll be there to help you. Now, let's get right to work. A lot of charts to show you, some really interesting things, so let's look. This video, 2004, is being created on October 2nd, 2019, for trading on Wednesday and moving forward. Red arrow on the board. We're still in that red Omni zone. We had a neutral to start out Tuesday. Omni got a short right at the highs. Thank you, Omni. Thank you. It was such a great day. And Omni wants us to get short again for trading on Wednesday. So red Omni arrow in the E-mini, S&P, NASDAQ, Russell, Dow, Transportation Average. Those usual suspects, all red Omni arrows. But here is what's on the board. One, in about a moment, please join me on a little stroll down technical analysis lane. I think you will like what you're going to see. You might not love where it points to, but you're going to like what you're going to see. And there'll be some comparisons that you will find to be like twins, if you will. Let's take a look at that. And then we've got Don't Fall in Love With, for the first time it's been on my board in a long time. Don't fall in love with the upside. That does not negate my year-end targets. We're talking for the next 5-6 weeks, but before the year is over, I expect to reach those targets. This is for now. Moving forward, forget about those. They stay valid, but not right now. We trade what we see, right? What's before us? Don't fall in love with the upside. And if you will now join me on this little stroll down technical analysis lane, I will show you why I've got this on my board. For you fans that have been hanging around me for the last 13, 14 years as I've been producing these nightly videos, you know this means something, right? Don't fall in love with the upside or downside, depends on what I put on my board. Well, don't fall in love with the upside for now. With no further ado, pull up a chair. There's a lot of charts coming. This is very important. With no further ado, let's go look at some charts. Traders, in the last 4, 5, 6, I don't know how many videos now, I've been showing you charts in this fashion. Dow Jones Transportation Average Weekly, it had one double top, which led to a crackdown, came up, put in a second double top, and we've been experiencing a pullback or a reaction to that double top ever since. So you've seen that, and you've seen it also on one of my Dow Jones charts. You've seen this chart in several videos, same thing. Although not quite symmetrical, they are acting as double tops and working as double tops. And we're now falling back from the latest. Another weekly chart, E-mini S&P, no different there, right? Double tops do work, even though it's a small pullback. Another double top, we have a bigger pullback taking place. And Russell, same sort of thing. Double top and the pullback below the Omni average, and this doesn't look very good right now. Then, of course, the same charts I've been showing you for weeks now on the daily. We've had this crazy double top. This is your E-mini S&P. This is that double top that we've been reeling back from. We're now starting to break below the 50-ball moving average. We're breaking down below some key averages. But this is the view I've been showing you. ES, this is the view. You look at Russell, same view, same chart I've been showing you for a while. This one's really starting to go now. Look at the Russ, it's cracked severely below my Omni average. But this is the daily chart, double top, and the reaction from it. You've seen this in video after video. And once again, Dow Jones, right? You've seen this in many videos. We've got one top, the other one wasn't quite symmetrical, right? 27,398 here, 27,306 here, but you don't need to have exact symmetrical formations for them to work in technical analysis. As long as the eye can catch it, it's good. So this looks like a head and shoulder, this looks like a double top, right? What I was going to say, or an inverted head and shoulders. But it looks like a double top to me and a double top reaction. Well, what if I took this exact same chart and showed it to you differently? This is the exact same chart. All I did was draw 3 circles on it and show you that there has been an Oscarism known as a failed head test. So, left shoulder, the head, the right shoulder. Now you'll note, it's not quite symmetrical because this shoulder's a little smaller and up a little higher, and this has like a V bottom and that one doesn't. Keep that in mind. V bottom look here in the left shoulder. Then in the right shoulder is a little higher and a little smaller. All right, and that is in your Dow Jones. Now just watch what happens. E-mini S&P, these are the same charts that you guys have been looking at. You just haven't noticed what I'm noticing. This is what's on the E-mini S&P. Slightly more symmetrical here. Oscarism known as the head test. You have a head and shoulders. If you come out of the right shoulder and fail to get above the head, usually then the down move starts. But once again, this shoulder's a little tighter and a little higher, and this has got the V bottom in it, right? You got that same look? And so now S&P certainly looks like a head and shoulders to me. These are topping patterns, by the way, kids. Maybe not the actual top, but these mean that the market should spend a little time going lower before moving in another direction later on in the future. NASDAQ now, you just seen S&P and Dow. NASDAQ, shoulder, head, shoulder, below the 50-ball moving average, failed at the Oscarism known as the head test. Now your NASDAQ looks the same. Transportation average. This is deemed the leader of U.S. indices. It does things before the other indices do, and then they catch up. Usually this shows you what's going to happen next. Left shoulder, head, right shoulder, head test, comes down. Second head test, comes back down. Take this very same chart, put my OMNI average on it. Now you're starting to build below the OMNI average. You got a big spike below the OMNI average. Same chart, shoulder, head test, big break, second head test, big break. Once again, if you want, you could call this an inverted head and shoulders. I hear a lot of people behind me screaming that out right now. All that would mean is that you got a series of head and shoulders together, still meaning very toppy action. Believe it or not, when they're strung together, many times it's topping action. Then we've got our FANG stocks: Facebook, Apple, Amazon, Netflix, Google. Facebook, shoulder, head, shoulder. Bear flag in the right shoulder. Bearish formation. Facebook, one of the big pieces of our market, right? Facebook, same chart. Now, the whole shoulder has been built where? Below the OMNI average. And so is the flag, if that's a flag inside the shoulder. So the whole right shoulder built below the OMNI average. The left shoulder has this little bit of a V bottom. The right shoulder is a little bit higher. Okay, remember that. Amazon. I've been showing you this for a while now. Left shoulder, head, right shoulder. Bear flag in the right shoulder, just like Facebook. This has projections lower. You take my OMNI average and snap it on Amazon. The whole right shoulder built below the OMNI average, as well as the bear flag. Both of these, this and this bear flag, both project lower. Now, so we just looked at Facebook, we looked at Amazon. Netflix started this a long time ago. You guys, it's one of the first ones I showed you. We had calls all the way up here for the market to drop down to here. That has happened. It's dropped a lot further since. Netflix was the first to go. So now you've got three so far out of the 5 FANG stocks. We'll call it FAANG, Apple and Amazon. 3 out of the 5 FANG stocks are pointing lower. Not so good. Let's move forward. This is back to your E-mini S&P. E-mini S&P, left shoulder, head, right shoulder. You've seen this already in this video. and you've got the Oscarism known as the head test failure. And note that this shoulder is a little bit lower, and this one's a little higher and a little smaller. How about this chart? Do you notice what this chart is? Left shoulder, which has this V bottom. The right shoulder is a little smaller and a little higher, and it had the failed head test. You know what that is, kids? That's the crash before 2008. I showed you this very chart in many videos below in 2008 before the crash. Does that not look just like this? Which is your S&P right now, top day. Isn't that interesting? You've got that V bottom here, you've got the smaller right shoulder, the whole thing built below the Omni, the failed head test. Isn't that interesting, kids? For now, I'm going to tell you, do not fall in love with the upside unless we can get above here. I am now starting to worry that we're getting signs that this market needs to travel a bit lower before end of year targets and the upside may come our way. This is starting to tell me that if we don't get above here, we have to use an adage, don't fall in love with the upside. Now, I'm going to show you one more version of 2008's chart. It's the exact same chart. Instead of having the shoulder right here and calling that a head test, I decided to include the whole shoulder, and it doesn't make a difference. We had a shoulder had a V bottom. Then the head came in. The right shoulder was a little higher than the left shoulder. We had the head test. It failed. The whole thing was built below the Omni average, and 2008's crash is right before your eyes. That, my friends, looks just like the S&P looks today. Now, I am not calling for a 2008 style crash. Do not get this wrong. I'm saying this tells me we have to spend some time on the downside overall before we can head higher. Traders, join me at livewithoscar.com. I will show you these charts. We can go over them in person, or at least on the internet in person. I'm there on camera and microphone at livewithoscar.com in my trading room. Okay, traders. Wow. Did you see that? You've seen the charts. Now, I am not calling for a 2008 style crash. I'm just reading the tea leaves and showing you what I see here. Shows me that we have to come down for 6 weeks or so before we head up for our year-end targets. Maybe it's more than that. Maybe Trump comes out with a tweet tomorrow and all those charts go out the window and we go straight up to new highs. Anything can happen. What I'm showing you is exactly what should happen if we follow those charts. No one knows for sure. But did you see that comparison to 2008? I mean, come on, kids. Time to take a look at things for what they are. This is what I said to myself when I got into that chart segment today. I went, Oscar, you better look at this for what it is. Go look at how similar that is to 2008. I mean, there is no arguing there. And there's this. For you fans that are really paying attention and you know about my cycle chart, this is month 20 of Jerome Powell. Month 20. Many of you know what that means. I'll show you that chart in my next video. So, I don't even know where to go with this. Video, doing that chart segment got me worried. So, don't fall in love with the upside means if the market rallies, of course there'll be up days and we'll get long for a day or two, but those rallies we expect to fade out and more downside than upside should come our way over the next few weeks. Now, because we're day traders, that could change like that. In my opinion, switches like the wind. When the market changes direction, the Omni changes direction, Oscar changes direction. I do not stand on a piece of analysis if it's going wrong. You know what I'm saying? Wrong is wrong. I am not here doing these videos to try to look right. I don't care how wrong I look, as long as we make money. My job is for us, you guys watching, me, to make money every day. I don't give a crap if I look wrong. So, if this analysis isn't working, I'm not going to be stuck in a short position for 3 weeks hoping we trade whatever comes next. What you've seen just now tells us sell the rallies for a little while. Don't fall in love with the upside. If we get a bullish Omni, we'll be very fast with it. We'd much rather get the red Omnis for now while this statement is on the board. I hope you liked that little stroll down technical analysis lane, because I know I did. And it's time for me to get back downstairs and see where the markets are. We've got positions on already. Traders, Thank you so much for watching that. I found it interesting. Rewind it and look at it again. Look at that comparison to 2008 and 2019. No joke there. And of course, if you want to learn this craft from me personally, join me at my final Omni Camp for 2019. Starts December 5th. A 4-day seminar here in Las Vegas. I'll teach you the art of Oscar's Market Navigational Indicator, the Omni. I'll teach that to you here. I am giving a 50% discount compared to 2020's pricing on this Omni Camp. 2020 would cost you twice as much to come out here as it will in December. Know that. If you've got time, make the December camp. Give me a call, 702-629-4755. Or just come on down to livewithoscar.com and fill out your OmniCamp banner. I hope to see you here in Vegas. There's a few seats open. Make sure you grab one. Barring that, I'm out of here like Vladimir. I'll see you cats later. Keep your emotions out of trading. One of the best things you can do, in my opinion, is not look at crappy charts like the ones I just showed you. Weren't they scary? Don't look at those. Put your stops in first and say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Traders, I will see you all at livewithoscar.com. Past performance is not indicative of future results. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.